video for Thursday, February the 6th. Well, the Dow Jones took a little bit of a breather. Dow Jones down only $5, Nasdaq down almost 20, S&P down about 3.5, and the Russell down about 9. And this was actually, we had some pretty decent selling. We had a lot of volatility, of unwanted volatility, I should say, and I'll show that to you in the chart. I mean, the markets at the opening were just horrible, and if you traded the opening, you would have gotten stopped out the long side and on the short side, and that's why we always say wait for the first 15 minutes to get some sort of an idea, and we add a few key internals that we talk about in the traders course, and that's one of the reasons that kept us a bay from trading anything the first actually hour of the day. It was really pretty much of a dismal trading. This sets up the tone of that there's bigger volatility to come. We're going to talk about that in this morning call video. Just want to go through the world markets. The Asia session was okay. I mean, it really wasn't much of anything. Shanghai was down only about 5. Nikkei down 25 bucks, and the Hang Seng up about 153 points. And then we have Europe, which is up nicely, up over about 1% across the board. But we have an event risk coming at 7 o'clock Eastern Time. We have the ECB rate decision, and that could be a big game changer, guys. So that's something that we're going to want to keep steady. Now they're talking about leaving rates unchanged, but there's rumors that stating that they might cut rates. If they cut rates, it's going to affect the commodity prices of precious metals and, of course, the U.S. dollar. Now, how does that bode good for our economy? Well, it could be, depends on what they how they interpret it. If the dollar runs up, people run out of the euro and they run into the U.S. dollar for a safe haven trade, and then may possibly bid into our markets and maybe bid up our markets again. So we're just going to have to wait and see. It's really, we don't know until 7 o'clock Eastern Time. So I am watching that closely. We also have, of course, initial jobless claims out today, and then we have the big non-farm payroll numbers come out, okay? So tomorrow is going to be really key here. ADP number yesterday came out. They were looking for 227,000 jobs. ADP reported 175,000. So again, another poor number in the jobs data. So that's also another problem, because why? Because the Fed has pegged their asset purchase to the unemployment rate of 6.5%. And that's something that we're going to really need to continue to watch, whether you like it or not. But as traders, we need to be informed, and we need to be kind of ahead of the curve of what the next possible move would be in the markets. Now, I do like a move higher before lower. Now, and again, it's just my opinion. What I'm seeing in some of the key indicators that I follow that is telling me that we are still looking for some sort of a bounce. Now, we haven't had that yet. So anything could change on a dime, as you know, with this market being so volatile right now. Anything could change. So I am looking for at least a bounce into the 1775, 1780 area. I was looking for higher prices to the 1814-ish area, but that has now changed because we continue to drift lower, or we're in a sideways consolidation. So 1775, 1780, we will evaluate and see where this market goes in the ES. That's the E-mini S&P contract. If the price action actually blows right through it, then we might have something to work with for further upside. But if we stall in these areas and we get a sell signal, I will be looking to sell rallies on a continual basis until something changes. Now, right in front of you is stocks above the 50-day moving average. I do like to look at this indicator, as you can see here. And what I did was I marked the 80 being overbought and the 30 being oversold, and sure enough, we are in oversold territory. So to me, this is why I say that we're looking for a possible bounce. That's the first thing, first indicator that I like to see. Second is obviously what is the VIX, right? The VIX, as you can see here, I circle these. These are good signs of reversals. Now, we did close outside of the band. We closed inside the band, and now yesterday's price action was still inside the band. If you can see this line here, that's the Bollinger Band. So we are inside the band, still giving us a buy signal in equities. Now, with the rate decision coming out this morning with ECB, obviously news can trump the charts. So don't go out and just look to buy the S&P. If you are a longer-term pitcher and you're willing to obviously ride out any type of movement in the markets to the downside, fine, obviously. But I would wait to see what happens this morning, and if we can get, now we're up pretty big, we're up about 10 handles in the S&P contract. early this morning. That really doesn't mean anything, although there is a risk-on type in feel right now. But if the markets do not like the ECB rate decision, those 10 handles can be gone in a matter of seconds. So anyway, another reason why I like the bounce. Okay, what I want to talk about. Oh, let's one more is a tick. As you can see here, lower lows, lower highs, not good. But we are back above zero barely. This is the end of day tick reading, so we're going to need to really break this little downtrend line, this little bearish tone to lower lows and lower highs. If we can start breaking back above it and hold and start kind of stair stepping here, that'll be another feather in the bull camp. Okay, now let's talk about real quick just gold. Gold is acting really well here at the moment. Now remember, what happens with the ECB rate decision will affect gold today. So that's why if you're not in it, let's step aside and see what's going on. Wait until we get better price action. If we can start breaking back above the 1270, 1280, then I think you got a good beeline shot to the 200-day moving average. Problem is that palladium is not going anywhere other than down. Palladium broke down, and that's why gold hasn't moved, and that's why precious metals haven't moved. If you could see, even with all of the fear going on, precious metals have not moved, and that's because of palladium. Copper is not the leader of precious metals. Palladium is. Although Dr. Copper, right, it's a good gauge of equities, and it still is. Not as much as before. In the last few years, whatever copper did, equities followed, and that does change, right? Relationships do change, But palladium really, if you're looking to trade any kind of precious metal, gold, silver, this is the one to be watching. Now, silver is also acting really well. We do have this horizontal consolidation. We did have this little sort of this flag pattern here. We did break out. We held double bottom, and now we're moving back up again. So it's it really what I'm looking for is, well, when do the market participants think that this is a fear factor trade, right? Safe haven fear. Oh, I want to get out of the markets. Let me put my money in precious metals. Well, they can easily go buy bonds before they buy precious metals, right? Because if you're a big guy, if you have billions of dollars to park and to hide, well, you're not going to do it in silver and gold, that's for sure. You're going to just move the markets up dramatically, so they go into bonds. But we'll see if the lower tier players, such as retail, small, larger wealth investors that don't have billions of dollars to hide, maybe they do run into the silver and gold trade. So we're just going to watch this closely, okay? But again, this is something that still entices me. I like the silver and gold trade. I really still like it, at least for a big retracement rally. I ultimately do think gold and silver collapses one more time into that gold, into 1100 area. Silver way down here below around like $18 before we actually resume an uptrend. Remember, gold is still in the bear market, okay? Here's McClellan Oscillator. This is the only thing that's the deciding factor. Great measure of overbought, oversold readings in the market. This is a little bit of a longer term, daily chart. I like the bar chart momentum index. I'm not showing it to you today because of the fact is nothing has changed. So I like to see if you're a swing trader and a long term investor, when the McClellan Oscillator gets down to 70, 80, more than likely the next day or the day after you will get a good bounce into the market, and that we haven't had that yet. And that's, to me, tells me that if I am holding some longs, I am going to nibble ever so slightly at these levels, but once we get down to the 80, 90, I'm going to add aggressively to my positions, and I would do the same. Why? Because what happens is when you get down to these areas, we get a really good retracement rally. Okay, now it doesn't mean that we'll be out of the woods if we get down to 80, but it's a good retracement rally that maybe you might not see that for a while, because then McClellan Oscillator gets back up to here and then starts making higher highs and higher lows. Okay, so that's something that I do like here. All right, now let's get into the chart segment. We have the Japanese yen. Need to know what's going on. We have a little cluster here, right? We have some extensions, and we have a 50% Fibonacci retracement, and we're now above the 38% retracement, right? And what's going on with the moving averages? Bullish symmetry, higher highs, higher lows with the candlesticks. Price, we have volume increasing. There's nothing wrong with this chart at all, actually, and this is not a good sign because we have the yen rising on increase in volume, which is telling me that this is bullish, that people are flocking to the yen. Now, with that, what does that mean to equities? Lower prices in equities. So we want to see this start to revert. We want to see this break down. We want to see volume increase to the downside with distribution candles. That'll tell us that money's flowing back out of the yen and back into equities. No two ways about it. Right now, that's why I would be light. If you are long and you're riding the wave out, fine. But if you are looking to add, I would not be adding until the yen starts to really break down again like this. This is a great little trade. Now, I do think the Japanese government, the Bank of Japan, will start to intervene once the yen starts to get closely. They are committed to keep the yen lower. And sure enough, when the yen was lower, the Nikkei had a phenomenal year last year. And that's the reason why. I think a lot of hedge funds fled to that trade, and I still think the trade is on. But again, we need to see this revert and get this bearish symmetry back in place again for the yen. Okay. Now let's take a look at the daily chart of the E-mini S&P. Here's the daily, and as you can see here, we're up about 10 handles. Again, that could change rather quickly if the markets do not like what the ECB has to say or does. So we are oversold deeply. We're starting to run up on the RSI. Stochastics did not quite get above 20, and we do have some volume here, but we're increasing to the downside. Not good. So this telling us we have some major distribution going on here. Okay, so that's why I'm not looking to get aggressive or to be actively trading at the moment, because I want to keep my pallets dry. And if anything does happen, I want to have a great opportunity to be looking to get short and or long for that matter, whatever the signal would be in equities. Now we do have the 8, the 20, the 50, and the 200 now all reverting to the downside. The slope is lower. That is not a good sign. And what is this happening here? Well, yes, we are holding this long-term downtrend line, but what is it making? Just honestly, just making a bear flag here. So this is not, oh, excuse me, let me just get my pointer tool out. This is not a good sign. Not a good sign. On low volume, no less. So I'm not liking this too much. We need to really get back above, get it back above this channel, and then start to really break out higher. Now, 1778, 1780, which would be the top of this other downtrend line from 2012. That would probably be a good spot to look to get short. We're going to have that, all these moving average, by the time we get back up into that area, we will probably be at this trend line, which would be a great confluence area of resistance and a great spot to get short if you get a trigger. Take a look at the hourly chart. As you can see here, the last couple of days, we've just literally been going back and forth, shopping around like we did here. So what does that tell you? Price action, price patterns, repetitive patterns. Same thing from down here. Logical spot would be another waterfall sell-off back into this area here. Okay, and if you don't think 1700 is out of reach, I would think again, because this market is crazy. It's either one way. When the markets are up, the markets continue to rise and continues with no sell-off in sight. Then when it goes down, it's just one, and it's vicious too to the downside. So when you get these gap downs, it's hard to get short. We really had no bounce. I mean, other than an hourly chart here, you could see, but you're still extended from this lower sell-off, and then all you do now is making lower lows, and then boom, sell-off, and then we consolidate again. So again, any retracement back to the 1775 area, 38% Fibonacci retracement would be an ideal spot, at least to get started for a short position here. I wouldn't short here in a hole at the moment. Here's the 5-minute chart. I just wanted to show everybody yesterday's price action. 930 up, looking like we're starting to roll. It immediately reverses, sells off all the way down to 1732 to take it back, sell off again, and then that was that lower high. That higher low from this low, and then we just drifted higher, and then again sold off higher, sold off into the close. Terrible, terrible price action. Now this is what I call bad volatility, right? Unless you're a scalper. If you're a scalper on a 2-minute chart or a 5-minute chart, just want to show you, because I get a lot of emails. What does actually bad volatility mean? This is bad volatility, okay? If the markets were to run up and then make a higher low, run up, make a higher low, run up, make a higher low, that's good volatility. That's price action moving higher and or lower, but still within a higher high, higher low series, or lower high series. Okay, that is not what you want. This is just absolutely terrible price action. I bet you tons of traders got stopped out of here. Now, if you wait for a 15-minute candle, what you would have done was at 9:30, you would have been 1, 2, 3, 15-minute bar, put the thing on the top, wait for the move, a break up or down, and you would have had a good short trade here if you were a scalper. Okay, but what happens either way, Look at this, and then really, you never really took out that range until later on, late in the afternoon, and then sold back into the range again. So terrible price action, guys. This is something that you really need to stay away from, and you need to recognize it too. Okay, going to the chart segment. So far, so good, right? Gold is holding up here. Gold's up, really, not too much, but we're up a little bit in gold. Silver's up a little bit. Palladium's up $6. But we want to watch this: the TLT, the GLD, and the spiders, right? So we're still down here. Watch if the bonds start to break out and gold starts to break out. That's your cue to be selling the market. Okay, so this is what we'll be watching. We'll be showing this every day at the morning call video. Weekly chart still intact, okay, barely, but still intact in the S&P. So the longer term trend is still valid, okay, still within the down of this large engulfing red candle. We need to get back above it. We need to get back above 178 to alleviate at least a temporary downside pressure here, okay. Still, MACD still way low. Stochastics below 20, and look at the volume. We can't get volume up. So this is not a good sign here. We need to really start to get going. Same thing with IYT. You'll see the pattern recognition, guys. I'm going to run through these. Now, we did get a little bit, which is a little bit encouraging. The volume was much better, but we still need to get back above here. Okay? Same thing with the IWMs. The IWMs actually is making me a little more nervous because there's a good gauge of risk on, risk off. And as you can see here, deeply oversold. I mean, it is a logical spot for a bounce, but I'm not looking to pick a bottom here in a Russell. Same thing with the Qs. Now, the Qs held up okay, but again, we're still within this range. I want to get out of this bearish candle here, this engulfing red candle. So let's just see what happens in the next couple of days. Diamonds, now we're below it. The longer we stay below it, the better chances are of another flush in the Dow Jones. So this is also making me a little nervous that we're still below the 200-day. We can't get back above it. All right, so let's go into GLD. Again, you see that trend line still holding. We need to get back above it. If we get back above it, close for a couple of days, I think you're going to get a good shot for the 200-day moving average. But wait until you let price get back above it, and let price tell us that we're breaking higher. Here's the oil and gas, still holding here, but now we're below the 200, and that's why you want to wait for these patterns to develop. And here's the XLE. Okay, remember we had this big bearish rising wedge. We broke below it. Now, this actually, in the longer term picture, I like the oil and gas. I like the oil and gas industry itself. I like oil. But I do like, if you can, this is still a good, this is a valid sell setup. Now, the next uptrend, next bear flag and fail, you would look to short this. Okay? But the longer term picture, I like the oil services sector. Here's USO. I think it's looking fantastic here, just consolidating. We don't want to get below the 20-day moving average. If it could stay above the 50, even hold above the 20, and then obviously you could see 35, 45 is a 200-day moving average. You see how the 200 days flatline? That's telling you what? There's no real price act. There's nothing going on here. There's just chop. But if it breaks above it, I'd say look out up top. You're going to get a good flush, big move to the 37.5, 38 area. And we have the home construction. Obviously, everything else is doing pretty sluggish, and so is the home construction. But remember, watch the rates, the 10-year. If 10-year starts to fluctuate, this will fluctuate along with it. Here's the XHB, the home building ETF. Now here's Lennar, and these guys are doing great. Now again, when the markets actually start to move higher, you're going to see some real good movement out of the builders. And of course the banks as well, once they stabilize here. Here's PHM, one of my favorites. And then of course, as you know, KBH I do like. Now, KBH has gone back in to this little consolidation area. So a little bit more. I'd like to see it get back into this right on the 50. If it could get back below 18 in the 50 and then the market's kind of stabilized, I'd like to get long KBH again. Okay, here is the XLF. We have this candle right here, and this is the long-term uptrend line from 2012. And as you can see here, just holding above the 200-day moving average. Now, this also looks like some sort of a flag formation or sideways consolidation. It's going to need to really get back above $21 to really alleviate some downside pressure. Citibank as well. Now, this looks pretty ugly here, guys. But again, we're deeply oversold. Look for a retracement line back to the 200 to actually possibly even get short for a quick trade. JP Morgan above the 200-day, stabilizing, acting a little bit better than Citibank. Goldman Sachs here, I wouldn't touch it right now. I'd like to see it get back above the 200-day as well. I want to see the whole group start to move. And lastly, here's Apple. Apple did actually well. Now, we're still here. We got this little V-shaped bottom here. Let's see what happens with Apple. I think Apple needs a lot more work. I wouldn't touch it at the moment, especially with the uncertainty of the markets. Step aside. When in doubt, cash is a position. Remember, guys, markets are made to fool the masses here, so use extreme caution. Remember, ECB rate decision, 7 o'clock a.m. We have initial jobless claims, and of course, don't load the boat here. Long and or short, we have non-farm payrolls tomorrow. Big economic data coming out tomorrow morning, Friday, 8:30, okay? Use caution here. I'll see you tomorrow. Take care, guys.